Shares of Nike down nearly 13% since it gave disappointing guidance during its earnings call last Thursday. The stock has lost almost a quarter of its value this year, but Oppenheimer ranks the athletic wear maker a top play for 2026, and its $120 price target is the highest on the street. This according to FactSet. Oppenheimer senior analyst Brian Nagel is behind that call. He joins us now. Brian, great to see you.
Nice seeing you too.
What did you hear on the earnings call that makes you think that it's the top pick for next year?
Well, look, I mean, I think, for me, the biggest positive here with Nike, and I mean, recognizing this is a very large company undertaking a turnaround, but I think the biggest positive is that where this management team has focused, they're seeing success. So if you dig through all those results, and they highlighted this on their call and in their results, but what you've basically seen is much better wholesale growth in North America. That's being driven by now a clean marketplace, but more importantly, the new products they've introduced, particularly in the running categories and some other areas. Now, China's still weak. There's still weakness outside North America. DTC is still weak. But again, for me, what really counts here, what gives me confidence in this call into 2026, is where the management team has focused, they are seeing success. And I think that focus will just keep basically cycling through this enterprise, and at some point, the whole thing will be working.
The new shoes do seem to be resonating, Brian. I'm just curious, though, if you assume that China is going to continue to be weak, which I think a lot of people do assume, I mean, can Nike still have that turnaround ex-China?
No, look, that's a great question. I think the answer is yes. Okay, I mean, China is obviously important to Nike. It's important for Nike's longer-term growth prospects, okay? But there's a lot of opportunity here within this very big company to turn around while China may still be languishing. Now, all that said, if you go back to the comments that CEO Elliott Hill made on the conference call last week, they're basically enacting a North America-style turnaround in China. Now, it doesn't mean it's going to happen overnight, but I think the positive here is they know how to do it. Again, clean out the marketplace, introduce better innovation that resonates with consumers. So they have the playbook. It's going to take a while, but look, I think Nike there's a lot of areas that can continue to turn around here before China's fixed.
Brian, it's Tim. I tend to agree with you on the view here. I guess I'm a little surprised at the price target, which, where you put that into either an EPS profile or a multiple. Why do you need to be at 120? Because that, I'm not sure where you have your target on 26 EPS, but the math says that it's north of 50. Am I wrong on that? Because, again, I'm bullish, but I don't see the EPS turnaround as quickly as your share target suggests.
Yeah, look, we tend to, at Oppenheimer, we tend to set our price targets with a 12 to 18-month horizon. Okay, so that's, we consider, in our terms, they're kind of intermediate, maybe even longer-term target. So that's kind of the time frame I'm looking. For me, I think the components here, earnings are very depressed. Okay, so what we've seen, Nike has struggled. They had the wrong product. Okay, the consumers to a certain extent, turned away from the brand. Okay, so that was the sales and earnings negative. But more recently, there's been a lot of this, repositioning effort. Okay, so like I mentioned a moment ago, Nike's very aggressively cleared old product. There's been a cost associated with that, and then more recently than that, you've had tariffs. And I think it's a very interesting conversation because what Nike is basically saying is that the tariffs will cost them $1.5 billion. Okay, right now, they're not offsetting those tariffs. So that $1.5 billion is basically weighing upon profitability. Over the next year and a half, Nike will work to offset those tariffs. But what that all basically means is if you look at earnings right now for Nike, they're depressed. Okay, now when I think about that price target, I think what you're going to see is earnings go from depressed to normalized over time. And basically, the market starts to really respect the longer-term earnings power of this model and apply a healthy multiple to that. And that's basically how I get to that 120 target.